Hey everybody, welcome back to the Ohio Valley Real Estate Report. My name is Johnny Kazumka, and we are broadcasting live from our St. Clairsville, Ohio office studio. And today, joining me is Jessica Richards from U.S. Bank.
Hi.
So we're doing an end-of-year podcast. We've been talking off-camera for a little bit about kind of market predictions, things we've seen, I guess, the past 12 months and our predictions for the next 12 months. And yeah, so I guess what are your thoughts of 2023 in general, and what are your predictions for 2024?
Yes, 2023's been wild. It's been a lot of the market changes and how are we going to shift to keep up with it. At the beginning of the year, middle of the year, I saw a lot of government loans. That was, the big push, especially when interest rates were going up higher. Now, I'd say in the last 3 to 4 weeks, I've seen a lot of conventional loans because, obviously cash is king. And then second, when you want an accepted offer, when there's multiple bids. And so that's what I'm being asked for now is conventional. It's a pretty big change.
Yeah, and we were talking about this a little bit off camera, and you mentioned cash is king. And if I'm advising a buyer, specifically if they have the ability to go in multiple different ways, sometimes people only have one path available to them, right? So maybe they're only government loan or only, but if you have a big bag of money cash, or you can finance conventional, or you can go government backed, or you might have a home sale contingency.
Yeah.
If I'm delivering those offers to one seller, they're typically accepting them in that exact order. So most people, when they first meet on my side of the fence, when they are talking about mortgages or getting pre-qualified, their real main focus is, okay, I am pre-approved for this amount of money, and I'm going to go buy a house for equal to or lesser than that amount of money, completely negating the type of mortgage involved, which is arguably more important than the amount in general.
Yes.
Yeah. So it gets. Can you expand upon the differences there? I guess why is that so important?
Yeah. So if you're in an FHA loan, your mortgage insurance, it never goes away. You have it for the life of the loan. And that's huge. And it's a 1.75% upfront fee of what your loan amount is. So even if your plan is to refinance it in a few years, you've already added on to that loan just to be able to get into it. That does not happen with a conventional loan. So if you have the ability, that's where people try and start. They don't have the government overlays. The USDA is another solid choice for government loans. Each has their own place, and each of them could be a very good option. But knowing the difference of knowing what for the life of your loan, what you're signing up for, that's huge.
Yeah, and I've always said, and not to speak ill of government loans, they certainly have their pragmatism or their pragmatic use as far as for first-time buyers. That's usually what I lump them into, is the government-backed loans. When we talk about them, they're just more difficult to close because anything the government does usually does not do in the most streamlined manner. Even little things like gutter downspouts, GFCI outlets, missing handrails. A Army vet, someone in the military can go and see the worst things humanity has to offer, be handed an M16 and say, here, go to war, right? And come back, but they're denied a loan because the house is missing a handrail, which has never made any type of sense to me whatsoever.
Yeah.
But we have to, that's the type of stuff that we're talking about that you have to nuance around. But with that, the good thing about government loans being secured, government entity secures the loan in the event of foreclosure, that lender gets made whole again. The interest rates are typically lower. But what you're saying is what you're seeing now as far as the Fed's announcement for some of those interest rate deductions over the next, how many did they say through 2024?
3 to 5.
Three to five deductions for interest rates planned through 2024.
Yep.
Conventional loans are rivaling interest rates of government secured loans at this point.
Yeah, I'm already seeing it. I checked rates today for someone, and it depends on an individual's credit score and their debt to income, but it was lower for the conventional. I got them at 6.625 without them paying points. And points are if you want to buy a loan down, if you want to pay money, a one-time payment, so you can have a lower interest rate. But I was looking at it for them, and I was shocked. Just like when you were talking about the VA loans, I saw more VA loans, I would say between March and October of this year. And it was because there was I don't want to say the incentive's always been there, but there was a difference in rate to have to, get that pest inspection or get the different things that are required for a VA loan. If there's not a huge difference or a huge benefit, even though a lot of veterans have put their time and effort in, and a lot of them just want to use a VA loan. I mean, there hasn't been a difference until now.
And it's been on this side of the fence, and because it's such a hard position for me to be in. I would even imagine for you as a lender, VA being an earned benefit, a risk of life earned benefit, right? It's something that you feel overwhelmingly compelled to use because you've earned it. And I don't want to steer anybody away from it. But oftentimes, VA is not the best choice for that particular buyer. There's other paths, people that can take that would be immensely easier. In this particular instance, with conventional, especially if it's going to rival that government secured interest rate, if that's all you're concerned about is the interest rate, there's really not much of a need to put so much focus onto these government loans. The only big difference I would say at this point is probably the down payment. It would be the main difference, in arguably one of the bigger ones. So again, if you have any questions, obviously talk to you, talk to me. Consultation's always free, right?
Yeah, absolutely.
We love to meet new people every day. So aside from the interest rate deductions that the Fed has already announced, what other predictions you might have for 2024?
Let's see. I would say we're still going to see a lot of first-time buyers coming out, but with I've heard a lot that people don't want to give up their low interest rate to downsize, or their family grew. Well, now with this buy down option, where they're asking, now it won't happen if you're in a bidding war, so it depends on where the area that you're looking, but I've seen a lot of buy down options. There's the 3-2-1. So if your interest rate is 7% and the seller agrees, instead of helping you pay closing cost, you could literally take it down 3% for that that first year, and then 2%, and then 1%, and it will help you get into a home. So there's so many ways to get into a home, and I think that's why the market is with all the different directions that we've gone this year, people are coming out. People are asking questions. People are, a lot of people were hesitant before, not to change us in directions, but they were hesitant about getting pre-qualified, and what is that, and how long does this take? I get that all the time. How long is this going to take? And with technology, it's not hard anymore.
No, not at all. And you hit on several good topics there as far as the timeline and things, and I guess that also varies depending on the type of loan as well. Where but the market conditions specifically, we just did a podcast. Me and my partner Scott Connors did one a couple weeks ago, talking specifically about this topic. The interest rates go up and down. They fluctuate constantly. Well, I don't want to say constantly, but they fluctuate. Thanks for liking the stream. That's our company here. But they fluctuate more than price. And in the Ohio Valley, I would be nervous if I was buying a house in 2023 almost anywhere else in the country, except for the Ohio Valley. Maybe some other outlier places across the country. But here in the Ohio Valley, our market is, generally speaking, 2 steps forward, 1 step back. I'm not saying that we don't go up or down, but we don't spike. Right? Recession looks like California staring at West Virginia, not the other way around. It's one of the perks of living here. In fact, we're one of the cheapest places to live globally. Like in the entire world, based off of median levels of income and population density. There's a whole bunch of, ask a statistician, they can, tell you.
Yeah.
But it's one of those things where people keep saying, I'm putting this off until the prices come down. I don't know that they're coming down. In fact, like you're saying, if the interest rates go back down, which creates a spur of people that have been sitting here, this whole damming effect, all these buyers have said, I'm going to put my search on hold until the interest rates go down. And then that dam breaks free. What do you think happens to price?
Oh, yeah.
It's going to flood the market. It's going to look exactly like 2018, 2019, when the Fed announced interest rates going down. People are jumping in to take advantage of it. Prices are going to go back up. And when the interest rates this is what we were talking about the entire podcast of 2023, the entire year, I should say. If you had to buy a house this year, because I call it the 3 Ds, death, divorce, and diapers, usually the 3 main reasons that people buy houses, right? If you were buying in 2023 and the interest rates go down, you can always refinance, right? You can always turn around and try and refinance, but you're still locked into the house price didn't go away. But if you bought, let's just say in the last 12 months, and then that those floodgates do open, you're going to get a surge of equity. Like your property might jump by 10% in 1 year, maybe even 20. In fact, we've seen houses double within 2 or 3 years. Houses,
yeah.
houses that are bought for 100,000 now sell for 200,000 within a 36-month time frame. It's insane. So to sit there and to say I'm putting my search on hold, I'm not going to do anything because of pricing alone, that makes sense in coastal Carolina. It doesn't make sense in Wheeling, West Virginia.
I absolutely agree with that. It's like we're in our own little bubble. And I lend in all 50 states.
Sure.
So, and I'm also from the Carolinas.
Sure.
And to see the taxes, the amount that people pay, insurance has gone up this year, taxes have gone up this year, and they're not going to take away what they're already saying your home's worth. They're going to get theirs. Sure. And so I've seen that there, but when it comes to Ohio, in West Virginia, PA, you know, our area, I don't see it. It's not as much of a slap in the face with, you know, just drastic differences. It's steady. It's everybody. It's like, you know, the quality, and not that homes aren't quality in other places, but it holds its value. I mean, it does.
Yeah, and that's the whole point is that, you know, trying to time the market almost never works. And for those who get lucky and then do that, put it this way, if I had a crystal ball and I knew that secret to success, this podcast doesn't even happen. I'm retired by now, right? Yeah. So this is all speculation. But what I'm saying is my speculation is based off of decades worth of experience with, you know, talking to professionals like you that have even Eric's expertise as far as you guys have your own property investments, right? And we'll talk about that here shortly. But, you know, things of that type of, you know, the comment section, right? Everyone's coming through and saying, oh, yeah, the interest is too high or the pricing is too high. They're not coming from, they're coming from a place where they see it on the news. Right. 24/7. Right. And the news is talking about a macroscopic level. They're talking about the country. Okay, I would agree if we're talking about the country. If you want to take that and laser focus this onto our area, I'm going to disagree 10 out of 10 times, because the market has continued to grow even during COVID, even during recession, even, you know, the worst of times. Houses are still selling today for more than what they were. Yep. You said we haven't had any crashing. Well, I mean, what is a crash? 20% reduction in price, 30, 40? I mean, where do you define a crash?
I don't know, but I think it's a combination of that and sticker shock. When you saw everything on, I think you hit right on it with when you saw it on the news, you know, interest rates are 3%. And so now people are hesitant, but you're right. The value's still there. We're still growing. And would you rather pay rent or own something of your own if you have the ability?
Well, the ability is the main question. But yeah, if you have the ability, paying rent is paying a mortgage. That's 100% interest. If you're going to sit on the fence because the interest rate is 7%, 8%, you know, even upwards, yeah, I get it. Probably not the best decision as compared to what it was 4 years ago, you know, the 3s and 4s. But if you're paying rent and you have the ability to get financed, you're basically paying someone else's mortgage. That's all rent is.
Oh, absolutely. And I don't want to say that renting is bad, because obviously with properties, we want people to rent. And I chose to rent. Like, I didn't want to have to take care of my own stuff. I didn't want to have to, you know, there's always reasons. So I don't want to put anyone down.
Yeah, I guess precisely. If renting does have its purpose, where, again, short-term leasing, long-term leasing, any of that. And again, the creature comfort of not having to, hey, the roof's leaking. Call the owner, right? You know, I trust me, I get that. And a lot of people will forego getting a mortgage for that type of thing. I'm speaking specifically about the buyer side as far as equity is concerned. But you're absolutely right. It's not to be overlooked there either. So,
I was backpedaling. I was like, wait a minute, what did I say? And we're live.
No, we're like I said, we can do a dozen podcasts talking about the advantages of renting versus buying, and you know, there's always, it just depends on which way that you're looking at it. I have my own investment properties. In fact, I think Nina she's our tenant in Martins Ferry. I think she just liked our page not too long ago. But no, they're perfect, high quality tenants. Like I said, I agree with everything you're saying. So I guess with your own investment wise, I know that we were talking before about some technology changes, and then what you're seeing as far as I guess, was that pertain to your investments or just your business in general? Or
so technology changes, I guess, would the banks and everyone that's doing the lending, we're all having to evolve. You know, I mean, it's not just in real estate. You go to urgent care now, and you have to have already signed in the process. Or I went to Subway in Elm Grove, and I couldn't put my order, you know, just speaking through the window. I had to type it. So technology is coming, and how is it evolving. How are we using it in mortgages? And I know coming into this, there's been a lot of talks when it comes to AI. And I see on my news feeds all the time, generating leads. But I think when it comes to lending, a lot of it has to do with, information that we can pull and simplifying, because it's, we want information right now. So when let me walk you through the process of when I take an application now, because it's not that sheet of paper, you send it home and people come back the next day during banking hours. I will send them my webpage, a link. They'll fill out the application. It takes maybe 10 minutes. While they're filling the application out, I'll, make them aware that as long as you put it, most of the time, I should say, if you give me your 2 years of history of your employment and you put their address and their phone number, I may not even need any documents from you. You may not have to give me W-2s, taxes. It takes that, you need, all this documentation, and it's not that anymore because you can get that information because everything's online.
Sure.
And so that's a huge difference. There's something called day one certainty with conventional loans, and we can get it through, and I might not need a stitch of documentation because it's all verifiable.
Sure.
And so I see that, and I see with the online banking, people log in, and then I don't have to get their statements. They don't have to take more of their time. And so it speeds up the process. That's how we're having these 14-day closings. And, it's not that, what it was.
And precisely. And especially, we just talked about this off camera, the pace that we live in as far as the world. And not just, technology is driving that pace, I would say, but just even the expectation, the management of expectation with our clients. If I don't answer the phone on the first ring, if I don't get back to my text message, we never have days off.
Right.
I mean, even Christmas is like, I always like, if I'm awake at midnight, because my phone is ringing less. Not that it's not ringing, but it's still, I still get leads, coming in. And it's hard because we have to nuance, people that are just searching, at least on this side of the fence, people that are just browsing, people that are serious, people that, whatever, accidentally click the link, put someone else's phone number in. It's really hard to kind of separate all those people and to filter them down into who really is wanting to be, because I don't want to call someone who doesn't want to be bothered. I hate when I go to a register, hey, what's your email? But it's the way of the world anymore.
Yeah.
But no, I mean, AI, I've always said it, AI will not replace people. People who use AI will replace people. That's the new kind of norm. And once that toothpaste is out of the tube, it doesn't go back in.
No, it doesn't.
It's that cat's out of the bag. And there's really, from my perspective, I'm a giant nerd. If you can't tell just by looking around the office, 2 types of AI. There's the generative AI that is the content creation, where I can tell it to write me a property description. I can tell it to create images, or even enhance images, right? I want you to do contrast correction, brightness correction, whatever. And then there's kind of like the to-do kind of, hey, I can hand this off to a robotic assistant where it can now do my document search. It can take this data and parse it out into these different fields, and basically enhances. It's a second you is really what it turns into. So it's awesome to see that in your world that we are, I would say, real estate, lending, health insurance, we're probably some of the most regulated industry in the entire world. It's awesome to be able to see that some of that process that has been overly regulated for nonsensical reasons for the longest time, delaying people for just the sake of delaying people, we can now do things faster and get things to close, because that's the world that we live in.
Oh,
right?
yeah.
And especially, as we start focusing on different, I don't want to call them age groups, but I guess that's probably what it would be. But, I'm a millennial, right? We were talking about this off camera. We grew up with things like Comcast being on demand. Burger King is have it your way. All we've been fed it, that's why they call us the entitlement era, right?
Right.
Because if it's not immediate gratification, we throw it away to go to something else that's going to be more immediate gratification. And if that cycle continues to grow, we better be able to keep up with that kind of pace, because that's going to be the next wave of clients, right? The babies that are just crawling right now are going to be the ones that we cater to 10, 20, 30 years from now.
And meeting them on their platform.
Correct.
Or what they, I can't just say anymore, well, I don't use YouTube, or I don't use this. I'm only Facebook. Like, you can't. If you want to be successful and you want to reach people, you have to get out and, evolve,
Yeah.
learn, how to connect. And it's not just going and, we're meeting at church or we're meeting at the store and I get to know people and the networking. There's still that piece, but a lot of it is done online. I don't meet a lot of people until I go to their closing.
Mm-hmm.
And I'm blown away by the change, because just a few years ago, people would want to come to my office and they would sit and I would even help them fill out the application.
Sure.
And it's no longer that way.
Yeah, and it's kind of scary in the sense that our lives, our jobs are helping people with facilitating the single largest financial transaction that they're going to make, typically in their lifetime.
Mm-hmm.
And not saying that people are taking that more lightly, but it's just one of those things where before it was, you go back to the 1920s, 1930s, and grandma was storing everything under the mattress because they didn't believe in the banks, right?
Yes.
After the depression, and who would want to put money back in the bank after? So they never recovered from that. That mindset was always there. And now you get to where we are here 100 years later, and it's like, yeah, I'll just sign whatever. Here's my Social Security. Just it's almost like
Mm-hmm.
they, I don't want to say that it's not, smart, but it's just a completely different way of looking at things. You will never convince someone who had to go through financial struggle
Mm-hmm.
before that, okay, I'm just going to start signing documents without even reading them.
Right.
And today it's just so different.
And you just talked about, cash under the mattress. I can't tell you how many times
Mm-hmm.
people try and bring cash
Mm-hmm.
and they're like, oh, I have it at home. Some people have it buried. I'm like,
Mm-hmm.
what
Yeah.
if it rains? But I don't want the government to know, because they track it.
Yeah.
And it's like, well, you're buying a home.
Mm-hmm.
So I like to have that conversation. If somebody's going to purchase a home, I'd like to even talk to them 6 months prior
Mm-hmm.
so we can make sure, like, I just do that soft pull
Sure.
to see where you're at. And I don't do a hard pull on their credit until they're ready to move forward. But at least at that point,
Mm-hmm.
they'll have the tools. They'll know what their monthly payment. Can they afford it? Or
Mm-hmm.
if they can't afford it, are they comfortable? And, if they get a flat tire, are you still comfortable making that without the, with all the changes? We didn't know COVID was coming when it did. Like,
Mm-hmm.
there's changes,
Mm-hmm.
and I mean, if I look back 5 years, all these whammies that have hit us and the changes, like, there's no way anyone could have forecasted it.
No, and it's like I was saying, trying to time and predict things. There's just so many moving parts to it that it's basically impossible. We can predict, we can speculate. I don't want to say predict. We can speculate on changes. And again, so speculation as far as interest rate is concerned. Fed announces reductions in the interest rate. It's not a bold statement to speculate that's going to spur buying activity.
Right.
But for those who have held out on wanting to buy, I'm also speculating that more buyers equals higher prices.
Oh, absolutely.
I mean, it's not, and that's for cars, stocks, house, shoes, you name it. If there's more buyers than there are sellers, price goes up. If there's more sellers than there are buyers, price goes down. I don't know, those who have sat on the fence this entire time, I don't want to be wrong, but I don't think that I'm going to be.
Mm-mm. And if you would have spoken to me, and it changes just that fast. If you would have spoken to me 6 months ago, I would have been like, well, maybe closer to the election.
Mm-hmm.
And that's what we were saying with the election. And then when the Fed came out with, the rates cuts, it's like people are like, okay, I've been waiting. I want to live my life. I want to move on. And I think it just took people getting to the point. They're like, why am I waiting? You don't know what's coming. And I've had two. But I've had two borrowers say that because they had pulled out after I already gave them a pre-qual. And they're like, well, I just don't know what's going to happen. And uncertainty, whether it's good or bad, has people, holding out. But once they got confirmation and they heard that about the Fed, I think that, well, it is time-wise. It's when people started coming out into the market, and now they're bidding on houses, and there's more people. And it wasn't.
Yeah.
I heard people saying, "Oh, you just want us to get a loan, and you're trying to put." And no, like, this is what happens.
I have told people I have never sold a house in my entire career. I've been doing this at a high level for the last 13 years, and I've never sold a house. Houses will sell themselves. My job is basically facilitating that transaction and helping with all of the quirks and all the nuances, everything else that's going to come up down the line. And what we're talking about is market condition. We can't possibly account for what an interest rate reduction announced by the Fed is going to do to spur buying activity. And if that buying activity is spurred in the way that we think it will, not only is price going to be altered, but it might be altered so significantly that the demand, okay, now there's 5 buyers for that one house. It's like boxing. You got to be able to compete equal to or better than the person across from the ring from you, or you're going to get smacked around.
Yep.
Right. And it's going to be rough. And as far as saying that, it's I hate to say that to a buyer, but it sounds salesy. It's, oh, you just want us to buy a house. No, I'm telling you, put your guard up, right? Because a cook is going to be coming. Here's whatever. So that's kind of what we've been trying to advocate all along. It's just and again, we could be wrong with that. Maybe the market isn't going to react. So, but from where we sit and from what we've seen in years past during very similar incidents, we've been through this, right?
Right.
So, yeah. But I guess any other comments or?
I would just say it makes my job much easier when I work with people. If you give me a chance to give you a mortgage plan, like before you get out there, let's either work on your credit ahead of time or get you to where, don't settle, get you to where you want to be. If you are that person that has cash, maybe under the tree or mattress or in your safe or wherever, put it in the bank. Like, I only have to go back 2 months. So you put it in the bank, you want to purchase in 3 months, or, as long as you give me enough time, I can help you get to where you want. But it's that sometimes it's, I saw, an ad and today I want to purchase a home. Well, without having the proper planning, we might not be able to make that to happen. Even if you have the down payment, even if you have, because there's just different rules and regulations. And I don't know that people know that.
Well, and that's what we're talking about is specifically before at the start of the podcast, people just want to go say, I'm getting qualified for a mortgage, I'm getting qualified for this amount, and I'm buying a house of equal to or lesser value without knowing all the regulations. And what we're saying, we're one of the most heavily regulated industries in the world. So yeah, if you have 10,000, 20,000 stored under the mattress and you're okay, I need 15,000 for my down payment, I'm just going to go make a $15,000 deposit. The Patriot Act. They're going to want to know where that came from.
Yes.
How did you get that money? Did you sell a whole bunch of illegal substances to get it? We need to verify where the money comes from. And that's outside the scope of your and I control. That is the government passing laws that, go blame your senators, go blame your politicians. But we are the beneficiaries of all that regulation. And we have to do this in a very precise manner, right?
Yes.
We can't just go and say, okay, here's a bag of money, go pay us back later. No, I mean, there's Truth in Lending Act, the Real Estate Settlement Procedures Act, now known as TRID, put together, right?
Yeah.
Those two laws are now integrated into one bigger law. And again, this isn't to be like the doom and gloom podcast, but what I'm trying to basically say is consultation is always free, and it takes no time to call me, to call you, to just get a little bit of information under your feet. We'll always do our best to put you in the best place possible. We're not going to sell you anything.
Right.
You're the buyer. You get to control all of this. If you don't like what we have to say, you can, walk away or no harm, no foul.
Right.
But at least don't sit there until, I see my dream home, and then just run and think you're just going to jump into this and go get a mortgage and, buy your. If you're not pre-qualified, someone else is going to be pre-qualified before you. They're going to beat you to the house, and you're going to miss every single time.
Yep. Oh, and another thing that I want to bring up is don't hide stuff, but also don't give more information than's needed. I see so many people, I'm sure you've had it at some point because you've been in it, but an appraisal or an inspection. If you have a home inspection, don't just offer, because once it gets uploaded in a file, there's nothing I can do. Send that to your, talk to your realtor or send it. I can't speak for all lenders, but that is something I will never send, even if it's requested. I'm going to fight tooth and nail.
Well, and I tell my buyers that all the time, and let's talk about that. So what is the difference between an inspection and appraisal, I guess, in your opinion?
So a home inspection is so that, in my opinion, and
sure,
correct me.
Yeah, I'll give mine. Yeah, I'll let you go first.
Okay. That is, if I'm a buyer and I go in, I want to know, if this is my amount of money, what should I have in savings? What could go wrong? I want you to tell me everything that could go wrong with this home, because I don't know, like my first home, I didn't know that it had termites. That's not something I would have picked up on, and they just pushed on the wood and they could tell. I still purchased the home. I just wanted to know about it. An appraisal is required. Now there's some drive-by appraisals, but just for this conversation, an appraisal is an outside expert that is going to do they're going to say your home is worth, this amount, and they're the expert in this field. If they see dampness in a basement, or they still have the knowledge, but they're there for the bank. They're there to protect. If the bank is gonna, that home is the bank's collateral until it's paid off. So they're gonna make sure the bank does not put their money out, and that's why on an appraisal it'll have the bank's name, because that's but the bank looking out for the bank.
Yeah, absolutely.
Okay.
And I agree with it. I would word it basically from how I tell my clients. There's 3 phases to a transaction: the inspection phase, the title phase, and the appraisal phase. And they typically happen in that precise order. And out of those 3, the inspection phase is voluntary. Okay, it's basically your one shot to ensure that the property meets or exceeds a condition that you and you alone are willing to accept as far as the property. So to that extent, there is no such thing as passing or failing a building inspection. It's your it's your job to select who you want to do anything that you deem them to do that's qualified, and to make sure that you're buying an investment that you are satisfied with. So some people, I use a broken window. Broken window might cause one buyer to run away in terror. I'm never buying this house, right? I'm going to go find something more put together. Another buyer might just say, knock a couple $100s off and I'll do it over the weekend.
Yep.
But there's no right or wrong. It's up to each individual buyer. The appraisal side is required. And the appraiser might say the exact same thing about that broken window. Oh, look, it doesn't work. It's broken. But out of the 2, if the appraiser says it has to be done because it needs to be, let's just say for a government-backed loan, it has to be in a specific condition to adhere to the HUD handbook, which is what, HUD, the Department of Housing and Urban Development, they're the umbrella. They oversee all these government loans, FHA, USDA, VA. If it's not in a condition that meets their standard, we have to fix it before closing, right? Or come up with some alternative solution, escrow, whatever. But it's a mandate.
Right.
So that's the real 2 differences between. But the appraiser and the inspector might say the exact same thing. Just so you know, out of the 2, only the appraiser is really the one that's going to force you to have that done, because their hands are tied as well.
Right.
So.
And it's not a bad thing.
No.
Like it's protecting you, because you're walking into a home, say the basement is damp, or say they have to, you're not going to be, as soon as you've already put that money out and for your cash to close, and you've already made this major purchase of your life, you're not going to have to make these fixes that could, be a structural issue or something. So it is for your protection. And what I say all the time is, just because it's shocking news or you think that it's bad, don't just walk away until you see what can be done.
Correct.
and work with. And that's where it's not my lane.
That's...
you get the fun part. You get the fun part.
Well, I've always said the easiest way to abandon rational thought is negative emotion. Anxiety, fear, anger, jealousy, you name it. Anxiety, we'll just talk about it. Anything that would cause someone to be scared or anxious, they become reactive rather than proactive. One of the biggest things that I hear all the time is, hey, this house has reverse polarity in 7 different outlets. And if you don't know what that is, all you hear is, oh man, this house has electrical issues and I'm going to need an electrician and this house needs to be, No. Okay. If I didn't become an agent, I would have became an electrician. All right. I really would have. And not that I'm not an electrician, but I can tell you reverse polarity, basically with alternating currents in this room that we're sitting in, it means that, well, it's wired backwards. White's on black, black's on white, right? But it'll still work because the current is alternating. It's going back and forth. These lights are flickering on and off about 60 times. We just can't see it because it happens too quick. Okay, it's an easy fix. The house doesn't need to be rewired. Now, if they came back and said, oh, this is old rope wiring and has knob and tube and there's splices here that aren't covered, okay, now we might talk about rewiring the house, right? So it depends on what the condition is. But I get it all the time. This house is, it's going to explode because it has, a reverse polarity outlet. Hold on. Come on. Let's at least, and that's, I really divert that back to the inspector. Like you said, don't overshare things. I try not to overstep that as far as my field is concerned. I don't want to say something and then, again, I'm not a licensed electrician, and I just be clear there. But I even say to my clients, I don't want to see the building inspection because I only want to see it if there's something that you're not satisfied with. I don't want to be a part of it because this is your turn to find someone who's unbiased. Right. I don't want to be there for the building inspection. So, oh, John was there and he covered this up, so no one got to see. The inspector couldn't do their job. I'm never there for that reason. This is And again, that's why I say I've never sold a house.
Ooh, and a big difference with that inspector and the appraiser, the buyer you get to
pick.
Mm-hmm. And that appraiser, I don't get to say who the appraiser is because, they have to be, where we can't be held like we're colluding. You can't put your thumb on that scale. Mm-hmm. Well, I think the house should appraise at this much, or let's just let it go. No, you're getting, they're fair. They're the professional, honest mm-hmm. opinion. And this is what they think the house is worth, so that, walking into it, are you going to, be in the negative? Like mm-hmm. it should give you a sense of confidence.
Yeah, and it's a good point. Again, going back to the regulation of our industry, is we don't have any influence. It's not mm-hmm. like you may have, anyone watching may have heard of the term subprime mortgages, back in the, early 2000s, late 90s, kind of when that thing started, where agents and lenders could bump elbows with the appraiser.
Right.
And then kids that were getting adjustable rate mortgages, working at, minimum wage jobs, the appraiser would come in and give this old elbow, and mm-hmm. sure enough, they get a $300,000 house that tanked to $150,000.
Yep.
Because or not even that, I don't want to say the equity, but the interest rate jumped, and now they can't afford it, and then led to a foreclosure crisis.
Yep. Since
then, since 2008, roughly in that era, we haven't had any communication with the appraiser. We're not allowed to pick. And I don't even know that we were allowed to pick before, but we were allowed to have more interaction.
Conversation, yeah. Correct. And I can't
mm-hmm.
be involved.
Mm-hmm.
And at times that's frustrating. I'm like, but we go through, it's called an AMC, mm-hmm. an appraisal management company. So if I'm not getting something, I'm not saying don't be your own advocate, or mm-hmm. if you're a borrower and you want answers, feel free to ask. I just can't call them and say, hey, what are we doing here?
Mm-hmm.
But asking for clarity through the company, or
deadlines,
yes,
mm-hmm.
all of that. I think it's empowering. It's the borrowers or buyers, major choice. They get to lead. And sometimes I think if you're, I have some borrowers that just want to sit back, and that's fine, because
mm-hmm.
I'm very confident in what I'm telling you, and if I'm not, I'm going to find out.
Sure.
But there are other borrowers that they want to know every step of the way, mm-hmm. and they should have that ability. They should, they have you active, advocating for them. They have me. They have it's like they get this whole support system. They're not mm-hmm. going through it alone. Mm-hmm. And at the end, I'm like, I just did all my Christmas cards, and with you're a part, you get to know the people. I mean, how many of your past clients come back to you and talk to you?
Geez, half of them. Geez, I got a shout out to Matt Fuller, one of my clients here. He sent me a message on Christmas the other day, and I said, "Hey, thanks, fam." My buyers, right? Mm-hmm. Fuller family. So if you guys are watching, but they're and not just them, but I mean dozens. There's right. dozens of different examples that just was readily available just because it happened 2 days ago. But no, it's family, right?
Mm-hmm.
It's not just clients, and it's that relationship. It's one of the biggest perks of why I could. I love what I do for that reason. Mm-hmm. It's not monetary driven. It's not, whatever. I like being able to be my own schedule, but that interaction, that's kind of where I felt like a natural thing. And if not, I'd go into some kind of construction field, kind of the same interaction, and get to stand back and say, oh, I hope you like your new kitchen. Right. Mm-hmm. But, no, it's certainly one of the perks from work, but, you hit it best is, not having so much control over that one section of that process. That is the worst part of the process for me, because of the fact that, especially as times continue to grow, and we keep talking about the pace and things mm-hmm. that people want it done faster and faster, and they're looking for answers. This is the one thing that I can't influence the action of other people any more than I can the weather.
Right.
All I can do is say, hey, let me make a phone call. Hopefully they answer. If they don't, my hands are so tied at this particular point. But again, you're right. Just a little bit of patience being a virtue. 99% of the transactions, don't really experience much. The ones that do, they're usually able to be resolved. And even if they're not resolved, we're going to put the broken pieces back together and get you back to where you need to be. Right. We don't just let things happen and say, oh, okay, well that stinks. Sorry. Bye. Right. We always, I always tell people, when you're low on my totem pole, if I'm not calling you, whatever, it's no news is good news, because my clients that are at the highest, if you have my attention, it's probably not the greatest thing, right?
Yeah.
I'm like a doctor. You really don't want to see me a lot.
Yeah.
So, but no, it's and again, who you work with matters. When we have a relationship like you and I, when I can call and say, hey, I need, I know the local lenders. Put it this way, I would rather go through the most difficult, bureaucratic, regulated loan process that you can think of that you have to offer. I'd rather go through that with you than a conventional loan with an online lender that I've never seen before or never heard of. Because I can contact you. I know the steps. It's easier for me to facilitate. So if you're watching this, work with Jess, work with a local lender, work with, you wouldn't hire me to show you houses in Tennessee, right? Doesn't make any sense. Why work with an online lender? So
I agree with that. And, having that availability and, just knowing the area, there's a big difference. I'm trying to think of something specific to our area. I went because we live in all, or we work in all 50 states. I don't branch out as much unless I've lived there and I know it, because you don't know how to combat something. Well, this is typical. This is normal, because what's normal here is not normal on the coast. And
I don't have to worry about hurricanes here.
Right.
I don't have to worry about Formosan style termites here. Right. There's a whole bunch of different. But you're right. It's something that I wouldn't even know how to begin to. I see people with tie downs throwing over their roof, like they had ratchet straps on the roof. It looks silly, but I bet that actually works
somewhere. Yeah.
Yeah. I mean, why else would it's just a completely different market. So,
the other thing that I'll say is I'm seeing a lot of out of state. So since, speaking of technology and remote work, I'm seeing people from like New York, New Jersey, California. They're all looking to our area, which, if you have a home or you're getting in the market now, the more people that come in, it's the rates, or not the interest rates, but the housing market. It's just going to keep going up. And our area, and I've only lived here 2 years, but this is home now. Like, it is safe. People are genuine. They look you in the eyes. It's not just, when I lived in Charlotte, it's you're a number, and that's not the case here.
Yeah. And I remember when I started getting phone calls from like California or New York or wherever, and I was like, that's just spam. It's just spam. And I'd start getting actual voicemails. Hey, I'm interested in this house. I can probably now count in multiple dozens of houses that I've sold to people that I've never met, which is crazy to me because I would never do that. But it happens because of the fact that you just said the market here is softer than so many other places. Like if you're in coastal Carolina, if you are western coastal, like a piece of grass, I don't even know what grass would sell for in San Francisco, but I have to imagine it's probably at the median level of what houses sell for here, actual built houses that are move-in ready because of the location. And COVID taught a bunch of people that they can work from home. And if you can work from home and you can go take all the money, so let's just say you're working and making a 6-figure salary, Western Coast, whatever, but you can take that 1 year salary and own a house here and work from here and travel back and forth. I've seen it so many. Scott just the other day, or was it a couple months ago, he sold to someone from Italy, again kind of a language barrier, but I mean, I don't know what the cash exchange or whatever their currency exchange or whatever, but I don't know much about it, but he said it was a foreign person who bought, and again over the phone, right? It's just, and he's never met him, so that is happening more and more. And I would expect to see it to continue. So.
Oh, absolutely. Absolutely. And that's what, I think even just like if this is our little area, St. Clairsville, and you go out with these bigger cities, Pittsburgh, and people coming to our area, that it's not just that, like there is something to that hometown, hallmarky kind of feel. And I guess I should have led with that when you say, what do you see for 2024? That's what I see. These New York callers that I have, it's people that are retired, that they only have a certain fixed amount of income. And so where can they live to be comfortable, rather than, because now at their age, they don't have a way to increase. They're not going back to work. They put their time in. So where can they live and be happy? And those are the kind of, I'm getting more and more retired people, which I didn't expect. But I mean, it is.
Yeah, and again, it's just the market change, and we adapt to the changes as they occur. And yeah, no, I understand wholeheartedly because because it was always strange, and I quit. I'm like, what do I want to say? Our industry on this side of the table is one of the easiest industries to kind of, I don't want to say take advantage of, but we answer every single call. If you want to prank phone call somebody, call a real estate agent because we're going to answer.
I love it. Yeah.
Right? Because most people, when the phone rings, I don't know the number, and they block it. Not anymore. If it doesn't matter the zip code, doesn't matter the state, doesn't matter, because every lead now, it's, it could be a buyer.
They truly could be.
Yep. Well, we've been on here for about almost half an hour now.
Oh, gosh.
Close to 40 minutes. So anyways, I guess pretty close to signing off. Any other words of wisdom that you want to say before ending the stream?
No, I guess yes. Just, even if you're thinking about purchasing or you just want to hear more. I like collaboration. I love hearing your point of view and your thoughts on it, mainly because you've been in the industry so long, but you can tell that you go above I'm just doing this deal. And so if somebody calls and they have a question, it's that bit of confidence that I can say, hey, this is my thought, but also, if I say, go talk to Johnny, like
see what he says.
See what there is. How hard is it to just have them keep an eye out for you? You're not ready yet, but sometimes you don't know when your perfect home is going to come up.
Yeah, precisely. And I've always said it. I'm not in sales. I know the license says salesperson. I hate it. I'm not in sales. I'm in consultation. Consultation is always free. You can call me at any time. I'll do my best to give you all the information. I'm not always right. I'll be the first person to tell you I'm not always right. But again, take what I'm saying, follow it up with what you're saying. And if you get enough people saying the same thing, you might want to start paying attention. This is an industry where the customer is not always right. Okay, this is where I'm not afraid. Look, you can find someone like you or me or whatever. You can find someone right now who will tell you anything you want to hear. They will please you. People pleasers. I'm not a people pleaser. I'm a realist. I'll tell you, hey, like you say, okay, your credit score wasn't this because of these, but you'll at least work with them on how to fix it, right? Okay, you do a building inspection. X, Y, and Z is wrong with the home. I'm a realist. I'll tell you, hey, here's what you need to know about these issues. You get to make the final decisions. Don't go to someone who will just pre-approve you online without doing their processing, don't go to the first person who's going to hold the door open for you with a cute smile and say, hey, whatever, and then not to just tell you what you want to hear. Get someone who's going to get on your level and work with you and be honest with you.
Right.
Because if you don't have that, that is a recipe for disaster, especially if you're about to undertake the single largest financial investment of your lifetime. You have to have the truth. It has to be right there in front of you.
And that may not unravel until the end, right before close, after, and then you're locked in.
I don't want to work with a dishonest doctor, a dentist, accountants, whatever. I want to know what I'm doing because I don't want to have to pay for that, that later. So really. But okay, well, thanks for watching. This is probably the last podcast. We'll see everybody in 2024, and I hope everybody has a great day. Bye.